You would say that what we saw last night was the classic risk off. We've not had this risk off.
Yeah.
We've not had this risk off after what's happening in Middle East. And it was an ugly day for the bond market. Now, if this ugliness or if this pattern continues in the bond market, then you would say that global markets which did not react or which did not react to geopolitical tensions, maybe they're reacting late. Now that's the setup for you for the equity market, Dow, Nasdaq, S&P. It is not a very scary fall, but the fact that the 10-year paper is now nearing 5%. I mean, 5% is something which we've not seen in a long time. So the difference between 4.9 and 5 could be 10 bips. But in terms of market psychology, a lot changes. And this is where we stack up. S&P is actually flat now. Brent is up 7% and the dollar index is up 0.5%. So is this a late reaction to what is happening to geopolitical tensions, or this is just a risk-off phase markets are going through? Very difficult to fathom. But yes, as we walk into trade this morning, you will have to deal with global cues. So that's a big cross, I guess, the bulls will have to carry this morning.
Yeah, absolutely. In fact, I just want to look at the GIFT Nifty implied open as well, because that too, in addition to the price action for our markets yesterday, is also indicating quite a bit of weak start. And I guess, it's pretty much par for the course. We're prepared for it, Nikunj, that it's going to be banks which are going to be leading the fall, as was the case yesterday when we did break that 19,700 mark. And there you go. It seems like it's going to be a sub 19,600 start for us.
So Aisha, in my book, the market will still qualify as a market you want to buy on a decline. I don't think we've decisively broken down. Yes, you may look back and say that, okay, I wish the markets would have gone above 20,000. I wish markets would have made a new high. I wish markets would have gone slightly, Nifty would have got a little bit of support from HDFC Bank and Reliance. But unfortunately, that is not the case. I smack there is an element of compulsion. And that element of compulsion, I think, is clearly visible in the way how large cap banks are moving. Even though numbers are not bad, valuations are not that stretched, everyone is surprised, including me, that why banks have just not participated. So this is what we have in terms of the trade setup yesterday. Nifty has seen long unwinding, but fresh short positions are getting added in the bank Nifty. So are we going to go through that phase once again where Nifty slips back into a range and the bank Nifty starts adding short positions, and the leadership in the market which we all were expecting and anticipating, I think that just vanishes completely. So the technicals are looking sticky. The technicals are not showing signs of fresh momentum or fresh trend built up. So the word trend, I guess, in the market is missing. And yesterday we did see profit booking in some of the the so-called small stocks also. So the stocks which are dominated and in a sense patronized by retail, by day traders, by hand-on heart traders, they also started really reversing. So a sizable correction in PSUs has kicked in. Railway stocks have reversed. Defense stocks are exactly not moving in a good groove. So the market has not reversed. The trend is intact, but either you're going through a dry patch or you're going through a phase where it will just get slightly sticky.
Yep, and that resistance around the 19,840 to 19,850 mark, it seems like that's what we're seeing. Of course, you have a lot of the heavyweights that have been under pressure, largely the likes of an HDFC Bank, for instance, Bajaj Finance and ICICI Bank. Yesterday's trading session saw some of these top performers within the banking space really buckle under pressure. Pharma, on the flip side, though, seemed to buck the trend. And as you said, yes, it's been some of those small mid-cap stocks that at least in yesterday's trading session fell more than the Nifty. But it's also critical to monitor the kind of earnings roundup that we've seen. We're in the thick of the earnings season. There's Wipro, and that came out with numbers, and that pretty much was weak. LTI Mindtree, a decent set of numbers. And for IndusInd Bank as well, it's been in line. And yesterday, it was a solid performance from a Bajaj Auto, Nikunj.
Yeah, so I'll start with you had 4 Nifty 50 companies which came out with numbers yesterday, and today you've got the entire FMCG brigade, so to speak. You've got HUL, ITC, the entire FMCG space. What is the scorecard looking like? Let's look at the scorecard. I think that in a sense, let's revisit it actually, and then we'll talk about 2 numbers, and then we'll take the conversation forward with Anisha. I think Wipro, nobody was expecting anything. LT Mindtree, we'll discuss with Anisha when she joins us. Let's focus on IndusInd Bank and Bajaj Auto. Bajaj Auto. Now, nobody was expecting good set of numbers from Bajaj Auto, but they've delivered, and more importantly, the margins have gone up. And the management, whatever they've indicated, they're confident that the retail demand could actually make a comeback, and they're talking about a 12 to 15% retail demand coming back because of festival season. Bajaj Auto has done rather well for itself. The arbitrage between Bajaj Auto and Hero MotoCorp, I think, is now visible. Bajaj Auto has hit a fresh high. Hero MotoCorp is still languishing at the bottom of the barrel. These numbers are indicating that things are looking up on the domestic market for Bajaj Auto, and the three-wheeler strategy is kicking in along with electric vehicle. But export, I think, is still the bugbear. Until the time the export things do not stabilize for Bajaj Auto, you cannot really come up with a very rara outlook. The advantage for Bajaj Auto is that it's cheap. 18, 19 times, 1 year forward, the downside is limited, and the upside, I think, would be a function of what's happening there. IndusInd Bank, numbers are in line with the positive bias, decent management commentary, and the MSCI inclusion. So the stock could remain warm. But with banks, numbers are just not mattering right now. It's compulsion of technicals which are at play. So I don't think that IndusInd Bank, even though numbers are in line with marginal beat, you will actually see a big upside. Bajaj Auto, I think, becomes a re-rating candidate given what they've delivered.